Glad to know you're still with us. And now in Zimbabwe, the country plans to introduce a new system to specify what ratio of taxes would need to be paid in ZiG, which is short for Zimbabwe gold and foreign currency, and those that can only be settled in the new unit. The changes will add to a raft of measures aimed at ensuring the ZiG does not suffer the fate of its 6 predecessors. From Harare, Zimbabwe, I'm joined by Traimo Mulanga, who is an economist. Thank you, Traimo, for joining me today.
Thank you. Good day, and thanks for having me.
All right, I feel we might as well begin by looking at the fate of the 6 predecessors and the probability that ZiG will not suffer the same fate.
Yeah, thank you again. Yeah, so if we're looking at the predecessors to the ZiG currency, the latest of which was the Zimbabwe dollar, ZWL, whose life expired around about the 5th of April 2024 when the new monetary policy was announced. I would say, to sum it up, they haven't fared that well, given that at some point in 2008, 2009, thereabouts, we ended up with quite significant hyperinflation, which was even by way of official inflation rates in the region of about above 200 million%. It could have been worse when you look at independent projections and calculations, rather. So that's what sums it up. We ended up with a situation whereby we had quite a number of zeros on the currency. The exchange rate naturally then follows depreciation. To cut the long story short, all of the predecessors rather did not fare well, and ultimately, economic agents could not utilize them for the ordinary purposes of the usage of money, which is a store of value. Primarily, especially, you couldn't store value in there. And even in terms of transactions, people then gravitated towards stronger and more stable currencies. I think that's how we ended up with multi-currency, whose genesis was around 2009, I think February 2009 to be exact. And it was people, economic agents, looking for a stronger and more stable currency of trade. One hopes that the ZiG will not suffer the same fate, that we learned lessons from previously. And one of the major distinct features is that ZiG is backed by reserves, which reserves may not always have been backing the previous currencies. But the major issue is maybe, do the economic agents have confidence? I think it remains to be seen. But so far, I think the ZiG has held its own, but there are a lot of dynamics. Thank you.
All right, that's quite exhaustive. Thank you so much. Now, the Zimbabwean government has taken a raft of measures to ensure this does not happen. I mean, what happened to the predecessors? And you also sort of believe that this currency is doing well so far. So do you think it is sort of recording the needed success? And, you know, how do you gauge it? You're also talking about some people who will probably need to see what they are saying or what they are doing.
Thank you. Yeah, a lot remains to be seen, but so far the indications have been positive. When you look at when the ZiG was introduced, it was introduced at an exchange rate, starting exchange rate of about 13.56 to the US dollar. As of today, when you look at the interbank exchange rate, the formal exchange rate, I usually just use the mid rate. It's around 13.59, I think, as of today. So on the formal or official market, yeah, it's actually, it has been firming and has held its own. The dynamics are quite tricky because there is the alternative market rate. Suffice to say, that alternative market rate has previously been viewed as the real rate. Why? Because that's the rate at which most economic agents would access Forex or access the US dollar if they needed it, especially for domestic transactions. So there are domestic transactions which are currently predominantly in US dollar and not in local currency. Even the authorities, when you look at the monetary policy statement of April, 5 April, as I alluded to, confirmed that in their estimation, 80% of transactions were actually being done in US dollar terms. So what the authorities would like to do is a reversal of trend, because the overall target is to have by 2030 monocurrency, just a single currency, which is actually the local currency. So why I mentioned the alternative market is because for the domestic transactions, economic agents then have a challenge going to the bank to access Forex if they wanted to pay for those commodities. One of which is actually fuel, because fuel is at the center of trading. So I think the authorities are trying to work out a situation whereby fuel can also be bought in local currency in the ZiG. But as of now, I can't exactly say I've seen a lot of people be able to buy fuel using that. So the alternative market currently is not that vibrant as it used to be. Why? Because the Financial Intelligence Unit has also cracked down quite significantly on that market to scuttle any trades. And there have been, there is the legislation which does not allow trading in Forex without a license. That has been invoked, and perpetrators or those that have been seen to violate that at various stages. Some are awaiting trial, some, so that's how it has happened. But long story short, currently, I think it has held its own. A lot remains to be seen whether in the medium to long term, we can maintain the discipline we've shown thus far, and particularly if there is going to be sufficient demand for the local currency, starting from the authorities themselves, because that's what will sustain the currency. As I conclude, I'll just then say, but conclude on this question rather, I'll just then say why the alternative or parallel market, a lot of them, people call it parallel or black, exists is because people may then have received earnings in local currency, but they have obligations in US dollar terms. So now they need a mechanism to convert that ZiG to US dollar. If there is no such need, if the ZiG can purchase everything that the currency should purchase, then I will actually just posture that the alternative market would actually die on its own, because it would then cease to serve any purpose, any tangible purpose. Thank you.
Well, quite interesting. You talked about some form of sanity returning in the market, especially in the alternative market. And we are also hopeful that, that day will come when maybe 80% of transactions, or even much more than 80% transactions, will be done in the local currency. So we can, do away with this as soon as possible. But then we also understand from Finance Minister Mthuli Nkube's statement that the Treasury is sort of, stepping up to implement a fiscal and monetary policy framework so it can further anchor the currency, exchange rate, and also price stability. And that, of course, is why we are where we are today, talking about the overhaul of the tax system. Talk to me about the impact you think this will make and how much of a solution it is.
Thank you. Yeah, so now that's what we should do, if you ask me, and we should do more of the same. You minded that in the previous question, I made mention to the fact that for the ZiG to survive and continue to hold its own, especially in the medium to long term, what is required is demand for that currency. The currency market, like any other market, is purely one of supply and demand. that you can reduce economics to just those variables if you were to put it crudely and simply. It's supply and demand, period. So if you have a situation whereby a currency does not then have that demand, but there is quite significant supply thereof, then what it means is that currency, like any other product or commodity in any other market, would lose value quite spectacularly. So what the Treasury is coming in to do, you will notice that in the monetary policy of 5 April 2024 that I mentioned, these measures were actually proposed to say the way to support the ZiG currency at its inception would be to ensure that some taxes are actually payable in local currency. So here the background was that because we're in a multi-currency regime, the authorities had then said you are liable to be taxed in the currency of trade. So if you traded wholly in US dollars, your taxes would then be wholly in US dollars. If you traded in local currency wholly, then 100% of your taxes would then have been in that currency of trade. But the foundation that was made in April was to say around about 50% of tax obligations, particularly what are known as quarterly payments, the QPDs, are supposed to be 50% in ZiG, 50% in local currency. What that does, I think that was a good start, because from the mathematics that the authorities had done, the governor was quite confident that given the level of QPDs payments that were due around 30 June, was the QPDs means quarterly, 31 March, 30 June, 30 September, 31 December. So as we get to 30 June, what they wanted to do was to create a scramble for the local currency in terms of corporates trying to access the local currency in order to pay their taxes. So that's where the paradox actually lies. Previously, we had economic agents and analysts like myself saying, if the issuers of the currency do not demand it themselves, who then is going to demand it? So that was a step in the right direction. So I think more could still be done, but for now, it is those corporate taxes, 50% in local currency. What it leaves behind is perhaps the individual who is to say what proportion of demand between those currencies is actually coming in the form of local currency. Like I said, there is a lot of debate around economic agents and analysts to say fuel, can it still be bought in local currency? As long as it can't, and you want to fuel your vehicle and you have local currency, you would be forced to try and find a mechanism to convert. So there is also other services, like from even the passports office, which is a government issued document, a government arm, and perhaps currently people having challenges actually accessing those in local currency. So I think those are some of the issues that would then need to be addressed. My view would be that if that demand is sustained for the local currency, the creation of that demand is sustained going into the long term, then the ZiG would stand a chance, naturally tied to the fact that with its quantum money supply in the market being linked to the amount or value of reserves. The reserves are naturally in the form of gold, precious minerals, and also forex reserves. If we maintain the ratio of our reserves to our currency, then that's the only way that the currency could stand a chance. But naturally, there are issues and blind sides, blind spots, given that currently, I think on this same platform, I think we discussed the issue of the El Nino-induced drought And then you say, as long as government has obligations, then they have to, resist the urge to print money to meet some of those. Suffice to say, currently, I think they've done a good job. They haven't gone to print the ZIG to keep the printing machine busy. Even the denominations of the ZIG currency that have been thrown onto the market, the last I checked, we hadn't actually released the highest note, which was the 200 ZIG, which means they were keeping a lead on money creation in terms of ZIG. I think those would be the positives one would point to, but I'll naturally emphasize the fact that currency is confidence, and if the authorities show confidence in the currency and demand it, then we can actually support the ZIG currency, and the alternative market, in my view, would die naturally.
Okay. Well, still talking about the ratio to be considered in the division of taxes, do you see, or what other challenges do you actually see in the implementation?
The implementation of such and its attendant challenges, I think first off is just the fact that I've pointed to. It's not cutting across. With taxes, you want it to cut across the whole spectrum. So this one would be naturally for QPDs are those for those in business. I think the major drawback is that not everyone is in business, and some would then be perhaps excluded. The other challenges, I don't foresee much challenge because it's the other way around. What I foresee, it would be an aspect whereby perhaps the corporates and the taxpayers would actually be looking for that ZIG in order to pay off their taxes. Like I said, you see, there are various proportions across the spectrum. There are sectors which are 90% dollarized. There are sectors which are close to 100% dollarized. And those that are 80, 70, it's a range. But all of those would need to ensure that 50% of their QPDs are in local currency. There are exemptions, of course. It's not everything. There is tax which will naturally remain in the currency of trade, tax for luxury goods and all that. I think even vehicles being imported and all that. But the major issue I would actually see for now is a positive problem, actually, if you ask me. It's positive in the manner that, in the fact that if people and taxpayers are actually having headaches around where to get the ZIG in order to pay their taxes, then it means the value of the currency can be sustained. I think that's what I would say, aside from the fact, naturally, that currently, as long as people still have other obligations in US dollars, you find businesses, as they strategize, are trying to ensure that they generate currency in the form of their obligations. Like, it would be a tragedy if you are in business, you have 100% obligations in US dollars, and you have maybe 30%, 20% generation of US dollar. So you want a situation whereby people and taxpayers do not have an incentive to ensure that they are deliberately targeting to have the greater proportion of their revenue in US dollars, because if they do that, then it means it just fosters usage of that currency, and it fosters and sustains the value of the US dollar at the expense of the local currency.
Okay. Now, for those who are listening, they'll probably be wondering what you mean when you say QPDs. You mind just expatiating before we move on?
Thank you. Those are quarterly payment dates. Those are quarterly tax obligations that businesses have, that would mean our year is mainly January to December. It means these are payments, tax payments that are due at the end of each quarter. For the avoidance of doubt, that would be first quarter 31 March, second quarter 30 June, third quarter 30 September, and fourth and final quarter 31 December. Yeah.
Okay, now a significant portion of Zimbabwe's economy sort of operates informally, and I assume that you alluded to that earlier. Now, aren't you concerned about ensuring the new tax system sort of integrates this informal sector so we can sort of promote wider ZIG adoption?
Yeah, that's very true. In excess of 60% of economic activity, whether you're looking at volume or value terms, is in the informal sector. Even when you look at employment, a lot more of our people are employed in the informal sector than they are in the formal sector. And as I spoke about the alternative market, the parallel market, or the black market, depending on which you would call it, as I spoke about that, what also sustains it is the fact that a lot of the informal sector players having no access or having limited access to formal channels, formal access to Forex, would usually then have had recourse to that alternative market in as much as it was and remains illegal rather. So any transmission mechanism of the monetary policy would naturally have, for it to succeed, would have to incorporate the dynamics of the informal sector, which is why in certain instances with the Zim dollar, the ZWL, you find that the authorities still maintained that they were not printing. And when you looked at the reserve money growth, you wouldn't fault the authorities and say they were overprinting per se. But when you looked at it, why the exchange rate continued to suffer or depreciate was because of that particular transmission mechanism that I mentioned. And if the informal sector is not incorporated, then it will not register this level of success that it should. That would be the view. So fortunately, as I conclude on this question, fortunately, you also then find that some of these informal sector players, they may be SMEs, they may be informal, but they have a certain level of formalization. So a good proportion of them will also be lining up to pay their QPDs, a good proportion. But the rest, perhaps those that are so micro in nature, I think the authorities are still trying to find a way of ensuring they are also included in the tax base. Those may actually not be involved, included. I mentioned those, and I also mentioned individuals in the proper sense of the word, to say individuals is payee, like that would be pay as you earn, that's income tax, is payee subject to the same tax arrangements which are under the QPDs. No, not exactly. So it would mean if you are one who is earning and have the tax, bigger tax being payee, then you are not in there. That's the blind side that the authorities also have to. But I believe perhaps they're thinking about it, and over time, perhaps they learn from QPDs. Over time, see also how they can involve or include the payee and other forms of taxes in that arrangement of 50% strictly local currency.
Well, at the expense of sounding like a pessimist, do you see these plans as a wild goose chase? I guess you don't. But then are you confident that the government is on the right track, really? And there fundamental or legacy issues the government must also address while it's rolling out all these, whether it's fiscal or monetary policies to address the challenges?
Yeah, I wouldn't fault you for sounding pessimistic. Yeah, I wouldn't fault you. Why there are legacy issues, as you mentioned. I think when you look at the economy of Zimbabwe and the history, particularly the changes of currencies that we have mentioned, and particularly the period 2008, 2009, where I said inflation came up to more than 200 million%. The local currency was virtually valueless. People, economic agents, lost value. Particularly, you had pensioners, people who had put aside or set aside savings or whose pension was due. Of a sudden, they ended up with maybe 20, 30, 40 years of work and 40 years of pension contributions, virtually worthless. Savings I've mentioned. So those economic agents naturally remember. And when you look also at what transpired around 2017, 2018, we had another form of the local currency, which was the bond currency, bond notes and coins. At its inception, it was at parity with the US dollar, 1:1. So if you had 100 US dollars and bought goods worth 50 US dollars, chances are sometimes you could actually get 50 bond notes as change, not 50 US dollars. But that arrangement ultimately collapsed and ended up with the situation whereby prior to 5 April 2024, the exchange rate was anyway in the range of 30,000. Even the official one exchange rate had gone into that region of maybe about 15,000. Yeah, I will need to just confirm. But that's how it had depreciated. So when you look at that kind of legacy, you're saying the economic agents, I wouldn't fault anyone who then says, now what has changed? I could point out that this is a new governor, but then somebody could say, back in 2014, when we were reassured of the bond note parity, we had a new governor. We have had different governors, and there hasn't been change. So I think one of the major issues that the authorities would need to do is naturally to address that skepticism from economic agents who would then say, wait, haven't we had such a line before? Yeah, so you can't fault them if you have economic agents that ask that question because to put it crudely, they may have had a variation of the same before. But the confidence that, if you wanted confidence, the confidence that I could point to would be to say, perhaps you give it a chance and look at how the authorities are actually going to manage the reserving, the baking of the currency with the reserves going forward.
Right.
And if the authorities can keep the money printing machine less busy, then perhaps it could work. Thank you.
Well, we hope they'll keep it less busy. Of course, the ZIG has shown initial positive signs, which you also alluded to. But what long-term economic indicators will be used to measure the success of this tax system overhaul, which, of course, is being implemented now?
Thank you. For starters, I think you would like to see if this is not a once-off. That's for starters. I think in the long term, you want to say, this payment, these quarterly payments, are they going to be sustained? Are we going to continue to say this was the base and perhaps maybe actually bring in other taxes? That would be the positive. But to give background, it's not exactly the first time that I've seen QPDs being paid 50% in local currency. I think this same arrangement, the authorities experimented with it in 2023, around about May, June, thereabouts. It was around half year, yet again, Q2. And it worked because when you looked at 2023, the exchange rate had actually peaked around June, like its depreciation. But when they implemented this, it actually reversed the trend of that depreciation. So I think a lot boils down in the long term to whether or not this arrangement will be sustained. A lot depends on it. And in the long term, like I said, at the risk of repeating myself, in the long term, what you want to see is sustained demand from the authorities to say, if you want to acquire this, if you want to buy this, if you want to pay this obligation to government, bring 100% ZIG. If they do that, then it means ultimately the economy will also gravitate towards the ZIG. The situation which would make this war scenario very short term would be if we discarded it and reverted to a situation whereby everyone is saying, if you have to pay me $100, 80%, 90% of it should be in US dollars. If that happens, then the ZIG dies because no one wants it. I think that's what I would just say in the long term would have to happen for it to actually succeed and survive.
Chai Momulanga, economist from Harare, Zimbabwe. Thank you so much for your time and your thoughts on the show.
Thank you, and thanks again for having me.